Lake City. And my first job coming out of my MBA program was at a finance company, and we started doing some venture financing. And I thought that was way cooler than the other types of financing we were doing that was kind of boring debt stuff. And it was like, hey, there's a little more risk here. This is kind of exciting. Well, one of the partners, after about 4 years, he left that company to go to a little startup, tech startup. And he took me with him. And so that was my experience, my first experience in the startup realm. And like I said, I was super young, and it was just this amazing energy. And they gave us all stock options, and we were like, oh my gosh, we're gonna retire like in 5 years or something. We ended up raising 3 pretty significant rounds of funding, and it was just this amazing excitement. So absolutely loved my time there. We did run into the internet bubble that burst on us. And so those stock options ended up becoming worthless. But it was an incredible learning experience. So that's what I tell a lot of the founders I work with is, even if you go into a startup, you will wear so many hats and see so much. You will learn so much if you're in a fast growing company, that you will always take that with you. So that education is invaluable. But I ended up loving startups. I ended up breaking away and starting a company with a couple of friends of mine. And at the same time, my wife started her own little, it was more of a hobby. And her hobby did way better than the company I started. And so I helped her raise some capital. And we ended up growing that company very rapidly to about 40 million in sales in a matter of like 3 years. So super hyper growth. It was, again, very exciting, but also stressful. And we ran that company for about 10 years and then sold it to a private equity group. So I have been in the shoes of a founder, and after selling it, they made me stay on for like 3 years, which was 2 years too long. But it was amazingly draining. I took a little break after that, and I ended up meeting some guys that were at this little startup called eShares at the time. And I introduced them to the Utah market, and they ended up setting up an office in Utah and later rebranding to Carta. So I'm sure you've all heard of Carta at this point, but that again was an incredible experience. But I will say, after having been a founder, I remember going into Carta once we kind of got things settled in Utah a little bit, because it was a little crazy initially, but going in and just going, this is like a vacation compared to being a founder. The pressure that's on you as a founder and the constant grind is so taxing. And so I grew to really appreciate that, but absolutely loved being in the startup ecosystem. And so Carta put me right in the middle of the startup ecosystem again. I led partnerships there in between the coasts. So everything that was like, it was like not San Francisco, not New York. Everything else was kind of like, you can have everything else. And I got the opportunity to see a lot of different startup ecosystems that way. So I was trying to hit all the major ones. And it was during that time that I started going down to Arizona, and I saw the makings of a awesome startup ecosystem. And this was probably 9 years ago. And I thought this place has the makings here. You had some decent exits like the GoDaddy folks and some other big ones I remember. And when I got down there, I realized that nobody really understood venture. It's like all the investors were like investing in real estate, and they were putting terms like real estate terms into angel deals, and it was killing the deals. Like they couldn't raise later. And I remember back then, one of the attorneys at one of the big law firms had come from Silicon Valley, and I was like, okay, this is it. This is going to change everything. We're going to start educating all the investors and everybody else. And I will say it doesn't happen very quickly. It's what I've definitely seen. It is, and when I look at Utah and how the Utah ecosystem grew, again, it's been a very slow process. So, anyways, that's probably way more than you need to know. But I did want to let you know, after Carta, one of the things that Carta kind of exposed me to was how little founders know about equity, especially first-time founders. There is a huge benefit to founders being second time, third time, fourth time founders, because you learn so much. And as a first-time founder, there's a lot to learn. And so surrounding yourself with experts that have done it before or know is super important. But that was one thing that I saw founders struggle with, was understanding equity. So like, being on top of their cap table. And that's what was really fun about being at Carta. That's what they do, is help make cap table management easy. Well, as I was at Carta, I started doing a lot of angel investing at the same time. And one of the companies I came across while I was at Carta was Forecastr. And I immediately saw that founders struggle with their cap table, but even more so, founders struggle with knowing their numbers. Most founders are not finance, gurus, but almost all investors are. That's kind of their background. And so there's that disconnect of, as a founder, you have to know your numbers. And most founders, that's not like their strength. And so I saw that's what Forecastr does, is help make financial modeling and your projections easy, taking it out of spreadsheets into a software platform. And so that's what was attractive to Forecastr. And I've now been there about 3 years. We've raised 4 rounds, total of about $15 million. And it has been a fun ride again. So I'm in the middle of a startup again, and we're just launching a new version of our product, Forecastr 2.0. So it's a really pivotal and exciting time for the company. We feel like it's going to be game changing. And so I'm in the middle of it.
Love it. Well, Jeff, a lot of the people in here, and when we started Silicon Oasis, I've mentioned some of the inspiration that we got, which was from your ecosystem and with Silicon Slopes, and just the amazing events that your state hosts, the media production that you guys produce, that really just has helped unify Utah. I mean, there's not one person up there who doesn't know what Silicon Slopes is, but there's a lot of people down here who don't. But so we're grateful for that playbook and what we're trying to do here. One thing, could you touch on a little bit, Jeff, on founders and funders and the group that you and your wife are, because you are, of course, in the Utah ecosystem, but you're also, you're national. I mean, you're going to Miami, you're going to Indianapolis, you're coming here. And the topic today is, what are the key pillars to supercharge a startup ecosystem, which everyone in this call is either a founder, an investor, or an ecosystem builder. And we want to see Phoenix become the Silicon Oasis. We want to see it become and have that notoriety and become a premier tech hub. Talk about founders and funders, and then let's segue into what you see as those key pillars.
Yeah. Okay. So founders and funders is something I started about 6 or 7 years ago. And originally it was just a way to get, startup founders and venture investors together in casual settings. So we'd do little events that would get, bring people together, like Top Golf. And it was just a casual way for investors and founders to meet each other. And honestly, some of the best connections were from founders meeting other founders and having mentors or folks that have been there before them. And there's just a real power behind those connections. So it started to expand to where during our big annual Silicon Slopes Summit event here in Salt Lake City, I remember the Carta at the time, they basically said, I wanted to be a sponsor of Silicon Slopes of this summit. And they're like, we are not sponsoring an event in Utah. If it's not in San Francisco or New York, we're not sponsoring it. And so I'm like, oh man, I don't have any budget. So I went out and I got with like Silicon Valley Bank and some other people that wanted to do stuff. I'm like, hey, let's do a side event alongside of Silicon Slopes, and you guys can pay for it all, and I'll get all the people there. And so we ended up we curated it so it was only founders and only investors, and we ended up having like 250 people. Just this real amazing dynamic there. And from there, that became like a pillar of the Silicon Slopes Summit. Was this, if you were an investor or a startup founder, you had to be at that event. And then nobody else could be there. So you're not going to get hit up by, a ton of service providers. So that's where founders and funders kind of started. And then we started, getting places like Denver saying, hey, can you guys come do an event here? And so we would go there. And then finally I got smart because I didn't have time to keep doing all of this. And finally I got smart and I handed this off to my wife. She now runs Founders and Funders and does a way better job than I was doing. But she's taken us into, New York, Miami. We're going to be down at South by Southwest next week. So it's given us the opportunity to go and see all of these amazing startup ecosystems and just see the differences between all of them. It's really fascinating, very cool.
Yeah, love it. Absolutely love it. And for those of you who don't know Silicon Slopes, they sold out the Jazz Arena last year with 20,000 people. So it's a big deal. And Jeff, with what he's done with Founders and Funders, where it's spawned there in Utah and grown nationally, has been really amazing in having some of that backing. Also, at the end of this, we're going to have a Q&A. So just drop any of your questions into the chat for Jeff, if you have any. But Jeff, so just break it down for us. I mean, you've seen all these markets, you're hosting all these wonderful events. I've seen the attendance that you're getting at Founders and Funders. It's epic. It's epic and very, very curated from what I see as well. What are those key pillars in each of these markets that really have vibrant, connected, strong startup and tech ecosystems?
Yeah, so along those lines, one of the pillars is community. There's got to be a strong community, and that's developed over time. And it's not just one person. There's so many different aspects to that because it's got to be investors that get it and want to support founders, but it's founders supporting other founders is also super beneficial. Actually, even investors supporting other investors becomes part of that ecosystem to where it can be very collaborative. There are times where it gets competitive, and that's just the nature of any type of ecosystem there. But that mentality of a rising tide lifts all ships. I think you want that to be the underlying mentality to build a good ecosystem. Community is one pillar, I would say. And so what Silicon Oasis is doing here, that is part of building a startup ecosystem. And it doesn't happen overnight, but it's a critical component. And all of this can kind of tie back to community. But if you look at some of the other pillars, I would say one is experience. Early in Utah, I mean, this took Utah, I would say 40 to 50 years to evolve. So it wasn't something that happened like, and I'll just give you an idea of from 1976 to 1996, Utah had 2 VCs and 17 tech companies. That's 20-year period where you have almost nothing, right? It's very dry and kind of the desert. And then in a 4-year span, I think between like 2018 and 21, all of a sudden you saw 118 tech companies and 17 VCs. So huge difference in the process of 4 years. And then if you look at today, I just read something that said there's over 40 VC firms in Utah now, which I was surprised there were that many, but they went through the list. I'm like, oh yeah, that's pretty legit.
17 to 40. Is that what you just said?
Yeah, isn't that amazing?
7 to 40?
No, it's 17. It went from 2 back in 1996, and then 17 at the end of 2021, and now it's basically doubled from there.
Wow.
So, isn't that incredible?
Yeah.
So, Jeff, what would you say was that spark where people went, hey, we need double the amount of VCs? Because obviously there needs to be deal flow, right? If a fund's going to set itself up, it's because there needs to be a constant flow from pre-seed to seed to, so on and so forth. Well, where did you personally see that jump of, like, what increased the amount of tech startups? What got the buzz going there?
So the most recent thing has probably been like Qualtrics and Pluralsight and Domo, these IPOs that went out and created this liquidity for founders that stayed in Utah. So what would happen in the early days is we didn't have the talent here locally that had done this before. So we had to go to New York and LA, and we were bringing in, these top executives to run the best company. So Novell was bringing in, top guys from New York because it was kind of this, oh, we think we have something here. Well, as soon as Novell gets liquid, all the top employees and everybody, they leave and go back to New York or whatever, or maybe they didn't ever even move here. So what really happened is when some of those employees, maybe they got some stock options and they had an exit. Well, now they have capital to either invest in other companies here locally, or start their own company, seed their own companies and do that. So that was and that was a slow, long process. I mean, when you only have a couple of companies to work from. But then all of a sudden you saw things like Omniture, which was more homegrown. It was a company here that was, somebody that came out of Novell and they started their own company. And I don't know if they came out of Novell, but maybe they did. It was one of those types of things. But they had talent now to pull locally as well that had some experience. And then they got acquired by Adobe, and all of a sudden Adobe sets up a huge office here locally. So now you've got more talent coming to Utah. And then from there, all of a sudden people that exited out of Omniture, they go and start their own companies. And all of a sudden it just starts to go kind of exponential there. As their companies succeed, they have exits. Now even more people have more money to invest and more money to start their companies. And you just started to see the flywheel happening. The most recent one was like Qualtrics, like I said, Qualtrics, Pluralsight, Domo. All of a sudden you had a ton of people. You're starting to see companies pop up all over the place now that were like, yeah, I used to be at Pluralsight. We went public. I got a bunch of money. I started my own company. I've done it before. Now you've got the experience. They also have the connections with other people they've been working with. And all of a sudden it just starts this flywheel. And that's where I think that the investors started to see that, okay, you can actually have these, 10-figure exits in Salt Lake. Look what Qualtrics just did. And look what, Pluralsight just did. And that ends up attracting more capital. But then the other side of that is you've got more capital that's staying in Utah now. And you start to see venture capital funds popping up all over the place now. So good example is Tandem Ventures. McKay Dunn was at one of the VCs here locally, Signal Peak. He wanted to break off and start his own fund. And so he had all the experience, had seen how to do it and everything. And he teamed up with one of the founders of Divvy, who had a big exit, sold to Bill for, a couple billion. And so then he's got a ton of money. McKay's got the know-how. Now you start a fund, and now you start, investing in more Utah companies. So you can see how that flywheel starts to to work. But going back to the pillars, some of those pillars are experience, having experienced founders, having enough talent. There for a long time, we didn't have the talent. I mean, even University of Utah, and we're pulling from BYU, you have to have the talent to kind of come up through there and invest in the, tech programs and if it's life sciences, you have to have the talent to pull from or attract it internally. The other thing is, and the capital is obviously another pillar. So the capital tends to come when you have big exits. They kind of follow. And a lot of times the big exits are what creates the capital, and you can see VC firms pop out of some of those exits. So those are some. The other thing that I thought of was there is an aspect of government support and bringing in and attracting talent to the ecosystem and attracting experience to the ecosystem. And one of the things I saw when Carta decided to set up an office in Salt Lake, they were looking at Denver and Austin, and they chose Salt Lake primarily because of some tax incentives. So they got a big tax incentive for committing to hire so many people. And you get a company like that, and all of a sudden, when I was at Carta, our first little office, we started out with like 20 people, and all of a sudden we were in this co-working space, and it just exploded. All of a sudden we've got like 100 people in this co-working space. Everybody hates us because we're taking over the place. And all of a sudden, Carta is attracting everybody I was working with. They weren't from Utah. They were coming in from California, Chicago, New York, wherever, but they were coming into Utah, and they were kind of setting up shop there. And you saw that not just with Carta, but there was a bunch of other companies that came to Utah similarly and brought a ton of talent. And again, that's a big part of building the ecosystem as well. And the government can have an impact if there's the right incentives and things like that to attract companies and talent. Anyways, I probably spoke way too much, but
no, that's honestly great. And we'll probably shift over to the questions here in a bit. I just want to ask one more question of you, Jeff, before we dig into those, which is, first of all, love the pillars. Thank you so much for sharing. I can see some of those similarly reflected, again, coming from working at a fund in NYC. Very similar experience, almost identical, to the point of I teamed up with Kyle McDonald because, I'm helping run Inked Greetings as well. I was doing events exclusively for tech founders, investors, operators, and I was also, a father, a husband, so it was just way too much on my plate. So it's very similar, funnily enough, to see. If you were to do it over as you're starting an ecosystem, what would you recommend to Arizona? Because I feel like we're obviously very much earlier than Utah and others, but I feel like we're on the right trajectory. So you let us know, right? If you were to give some advice for this is what I would have done.
I don't know that it's me that I could have done anything and had any impact, but as an ecosystem itself, kind of looking back, it's when you're hiring people, like going back to Novell and We're Perfect. When you're hiring people, hire people from within to lead who are going to stay, because I think that was the biggest challenge. But it's also so difficult when you don't have an experienced CEO that's taken a company from 50 to 100 million or 100 to $1 billion, right? You're lacking that experience. And so you kind of have to bring in people that have done it. And the quicker you can get that experience within the ecosystem, the better off it is. The quicker you're going to attract talent, capital. You'll probably get government support. It's kind of it kind of starts feeding itself at that point. When you see success begets success.
Yes. All right. Thank you so much for sharing, Jeff. Appreciate it. And Kyle, did you want to go ahead and start digging into the questions so we can get everyone's feedback and thoughts?
Yeah. Jonathan asked, is there a checklist so founders can optimize for investment funding?
I asked that question, and Jeff was actually going through those pillars, and that's the pillars, right?
Nice.
For the ecosystem, for building the ecosystem.
Yeah, well, the pillars for to be optimized. So if I'm a founder, I'm creating a tech opportunity or a tech solution. I'm funding a tech company or founding it. How do I optimize that? And that's basically having those pillars, right? So having an experience. Go ahead.
Yeah, I was going to say, I think that helps you. Those pillars help you by creating an ecosystem that will help you thrive as a founder. But in terms of operating your own company, there are things that you have to do in order to get venture ready. And part of this goes back to the community of educating. So what I tell founders when I'm working with them, the best thing that you can do is to find somebody that is like a step or two ahead of you. So if you're raising a seed or if you're raising a pre-seed, get to know founders that have already raised their seed round, right? Because they've been through exactly what you're going through. They know the roadblocks, they know the pitfalls. They also know they have contacts. Use them as mentors. And that's where the community can really come in, is matching up founders that are kind of, helping each other along the path. And you'll find that most founders are super excited to share all of their failures with everybody else, but they're like, this was so hard. If you do this, it's a lot easier. And so helping each other along becomes, something I would highly recommend if you can kind of do that.
Right. There's a good book. It's called Who Not How. And that's exactly what it is. It's just leveraging people. Instead of you struggling through the way of your how, you can just find who can show you how to do it.
Yes. Love that. Love that.
Thanks for that. Next question from Vincent, one of our ecosystem ambassadors. Was there any specific method, campaign, strategy that you think was used to keep the investment funding in state for the Silicon Slopes ecosystem?
Oh, yeah, I think I think having the big events like the Silicon Slopes Summit type thing, it created kind of this, hey, let's help each other succeed mentality. And so it was like you did want to go to the VCs in Utah as a founder. And as an investor, you wanted to look at Utah companies. And so there was kind of this feeling of, hey, let's help each other out, right? And some of that would have come through, Silicon Slopes kind of branding, some of that type of stuff. But ultimately, you do have to have good companies, because investors are in it for a return. And if they're investing in Utah companies and they aren't getting returns, then they're not going to raise another fund, and nobody's going to be around to invest. So,
yeah, love it.
Jeff, thank you.
Next question from Brian. Can you talk about pre-seed and seed funding and the challenges for startups to raise, given everyone wants traction?
Yes. And everybody does want traction. That's the best proof of, product market fit out there, is revenue. I will say that traction doesn't always have to come in the form of revenue. Some of the best founders I've seen out there have leveraged experience, team, and going out and like pre-selling stuff. So I've seen really good founders go out and raise, venture capital by getting LOIs, demonstrating that, hey, what we're building, we're just starting to build it. What we're building, people are demanding, and they're willing to sign that, hey, as soon as this is ready, I want it. So identifying how to create traction that way for a pre-revenue type company. And the other thing I've seen is like founders that have done this before. And let's say you're a first-time founder, getting somebody on your team, like a co-founder that's already done this, is the other thing that's going to help you get through that, traction, phase. So those are two things that I've seen on the pre-seed, pre-revenue type companies that can be super helpful. It is hard. I mean, that's a hard stage. And I would also say that as an investor, I want to see the founder put everything into it to where you are getting revenue and you've got something that people want and you've proven it. And now you've de-risked my investment to some extent by saying, okay, it's all ready to go. People want to buy it. We just need more capital so that we can, get more people out there who want to buy it.
Love it. Love it. Thanks, Jeff. Elizabeth from Phoenix Ventures, she asked, in addition to tax incentives, were there any other government efforts that you saw be effective in startup creation or startup relocation?
Yeah, from government activity, I will say, I don't think Utah is the best at it. Colorado, when I've been in Colorado, this was probably 4 or 5 years ago, but they had, I thought, a better government support in a lot of ways for a startup ecosystem than Utah. Utah used to have a state-sponsored fund, like a VC fund that would invest in Utah companies. That ended up getting disbanded. And, it was kind of like, oh man, you kind of want the state to be, doing the pre-seed. Let's have the state take a little bit of risk and, kind of seed some of these companies and see if we can, some of them are going to hit. I've seen other ecosystems, Chicago. I have a good friend that was in Chicago, and that's how they created theirs. It was very government run. It was kind of like the government would set up funds and give out, investments, and they have different criteria than a VC, where, maybe they don't have to have the returns that a VC does. So I will say Utah probably hasn't done the best job. At the same time, I think we've got a very pro-business in general environment, and anything they can do to attract good, solid tech companies, they want to do that, and they've been very supportive. So yeah, I hope that's helpful, Elizabeth. I would be curious to hear what Arizona's kind of done on that. I don't know. I remember ACA, and there were some other groups there, but I don't know how that has worked out in Arizona.
Absolutely. Thank you for that. And I'm not an authority on all the Arizona programs here, but my background was more in the government side. So I'm just always curious about in between the two sectors. I do have one follow-up question for you, actually.
Yeah.
Have you seen, because part of it is creating startups here locally, but then also attracting startups to relocate here. In Utah, have you seen, are there, you shared Carta, they relocated, they choose Utah to relocate. Is that a common thing that Utah is attracting folks to relocate at this stage, or is that more of an infancy they're attracting?
Great question.
Yes and no. That is a great question. I'll give you some examples I have seen. I have seen founders who have struggled in other ecosystems to raise capital, including Arizona, where they have relocated to Utah. And, that's yay for Utah, right? But I mean, when you're losing founders that way, you don't want to do that. So one thing, if you kind of look at this, you think of, okay, what are some other ecosystems that really aren't very good at retaining founders? Let's go get them and bring their good founders into Arizona, and retain those founders here. Make sure that they do have the support, the talent, all the pillars that they need to succeed. That's probably the way to combat that.
I had a moment of pain this week where Redo was listed on the NASDAQ billboard in New York, and the founder of that company is a Mesa, Arizona guy who uprooted his company to go to Utah. And so I actually reached out to him about that, and he just very simply told me, hey, listen, love Arizona, but just that ecosystem wasn't the right place for my company at that time. So,
well, and 10, 15 years ago, Utah probably wouldn't have been the right place for his company. And I think if you look at what has changed, going from, from having 2 VCs to 17 to 40, it's like when the capital's there, it's a lot easier to move. Lots of founders set up shop in San Francisco or New York or some of those spots because it's so much easier to connect with people that are kind of in that ecosystem. But
Love it. Love it. Thanks, Jeff. Tony asked, what are some considerations to staying bootstrapped or seeking funding through a seed or pre-seed round?
So I will say I was actually on a webinar today earlier, and we were talking about fundraising strategy. And, one of the things that I love to see founders wear a badge of honor that they haven't raised. And getting to that point where it's like, hey, we control our own destiny. And if we're going to raise, then it's because we know we can grow. And I will say, when you've got that, Qualtrics was bootstrapped. Pluralsight was bootstrapped for like 10 years. And they became billion-dollar companies, right? Multi-billion-dollar companies. They started by proving things out, and it's a slog. It's not easy. But the best companies seem to form from, bootstrapping and getting to the point where as soon as you've got product market fit, and if you can find that, and then if you can get it to where you're funding the growth through revenue, all of a sudden you become really attractive to investors. Investors are like, okay, you've already proven it. And that it works. You've got a formula down. Now, if we threw more capital on, we know we could actually really make this thing go. And so, there's a real balancing act there. I don't know. There's a lot of founders that think that, I'm starting a company, so I need to go raise capital. I think you're starting a company and you need to go figure out if you've got product market fit. And then see if you can get it to where you can make money and then start being attractive to investors.
Cool. Awesome, Jeff. Well, I'll wrap it up with a last question here. Just with starting Silicon Oasis with Josue, and Josue has been, hosting events here in Phoenix for close to 1.5 years now. And there's some other people on this call who've been in the ecosystem for a long time. Some of those pillars that you talked about, we can't immediately control, right?
Yeah.
But one that we definitely can immediately control is the community aspect, right?
Yep.
If you had like 1 or 2 things that are just the pure amazing makeup of community building, community development, ecosystem development, especially like some of our ambassadors are on this call for Silicon Oasis. Like what's some advice you would give to us going forward to keep cultivating a healthy, awesome community for the Phoenix ecosystem?
Yeah, I think what comes top of mind again is that founders helping founders. If you can get founders lifting each other up or pulling each other up. One aspect of being a founder is it is super lonely. The only other people that get you are other founders. Your spouse probably doesn't get it. They don't understand the weight that's on your shoulders. Your employees, you can't tell them how hard things are because you're building the team. It's like, hey, things are great. You want to stay here. You can't divulge everything to your board. You want to be transparent, but you don't want to tell them everything and how hard everything is all the time. The only people that they really have to talk to are other founders. They totally get what you're doing. So if you can get founders together, that creates this, hey, we're doing this together and let's lift each other and pull each other up. I think that's super powerful. And then the other side of it is the investors. That's a hard one, but highlighting investors. So one of the events that we do, the founders and funders, has kind of become our signature event, is the VC reverse pitch event, and where we get investors to come and highlight, hey, here's what we invest in. Here's, the size of the check that we typically write. This is what we're looking for. Well, the founders get educated through that by saying, oh, so just because you raised $500 million doesn't mean that you can actually invest in me? Wow, that's interesting. Who can invest in me? But it becomes this educational opportunity where you do have to educate the founders, and in some cases you have to also educate the investors. So, leading with education, leading with community, I think, you guys are on the right path with Silicon Oasis.
Cool. Yeah, Vincent just said in the chat, the most popular session of Phoenix Startup Week is actually the founders F-Ops. LOL. So I don't know, Vincent, if you want to expand on that, you feel free.
No, it's just every year. You guys can hear me, right?
Yes.
Every year, I mean, probably for the last 5 years or so, maybe longer, but that's just always been like a staple since we started instituting it. 1 year, it just was like, oh yeah, we should do that, and see who and what they say, and it's always been really interesting, and we've always had really good response from not just the audience, the attendees, but also the speakers that are willing to come up and talk about that.
Yep.
Very giving and willing to divulge some pretty good information in the sense of what happened that went wrong, and it's always useful. So
I love it. One other thought that I had as Vincent was talking is, attracting investors and other people to the ecosystem. That is something I was seeing, like Kickstart is a fund up here in Utah, and they used to have Sydney Keddington was there, and she was always down in Arizona, and it got to the point where I think others started feeling FOMO. It's like, hey, what's she doing down in Arizona? Are we missing out? Right. But getting folks like that are part of the ecosystem, that aren't, bringing them in, I guess, is another way that I think you could start to create some FOMO with whether it's investors or other founders. So, that's another thing that I have seen in some ecosystems. One that I will flag is Indianapolis. We did a founders and funders event in Indianapolis last year. They invited us to come and do the event, and we ended up having founders from Chicago, from Louisville, from Nashville. It was like, it attracted everybody. It's this rally conference that they did. We had over 350 founders, and it was highly curated, that came to listen to, 8 VCs present. And the VCs were from all over the place. But all of a sudden, Indianapolis was like this little hub, and everybody's like, whoa, I didn't know Indianapolis was so awesome. Well, they're doing it again. There's a group out there called Elevate Ventures. They only invest in Indiana companies. They're listed as one of the top VCs, like in terms of activity out there. Like they were like number 3 or something in the nation of the number of companies they've invested in. They're all in Indiana, or at least have Indiana ties. So again, they've got an interesting something. It may be worth looking into kind of what they've been doing. But Elevate Ventures has been a huge part of the success that they're seeing in that Indiana ecosystem.
Wow.
Nice. Thanks for sharing. And I know we're kind of coming up on time here, but I want to share one last comment. Commented by Scott McKay, which reads, "You mentioned that the community accelerated when your wife took over. Can I draw a conclusion that having a full-time focused resource building the community is a catalyst?"
There's something to that. Yeah, doing it on the side is challenging, right? I mean, it is. It's hard. I mean, Josue, you know, you're
Yeah.
doing it.
Yeah.
Yes, we are. Well, Jeff, thank you so much. You know, we love to hear about your experience in the Utah ecosystem, but also all across the country, including Arizona. I know you hosted an event for founders and funders here back in October.
Yeah.
So we'd love to have you back. And for all those who are on this call, Forecastr 2.0 is coming out, as mentioned. And Jeff has been kind enough to share with us a awesome special offer discount. It's 20% off for the first year and waived onboarding fees. So we'll get that out to everybody who registered for this event. But Jeff, thank you so much. We all on this call want to see Arizona become, you know, Silicon Oasis and become a true premier tech hub, and can always use as much mentorship. And we want to get people out of state here all the time, and we want to get the Arizona founders in Utah back to Arizona.
I hear you. I hear you. And you could probably tap into some of them. I mean, the guys at Space Station Investments, they're Arizona guys. Have them come down to, you know, the next Silicon Oasis event. Bring them in, spotlight them. They've got Arizona ties. People that I've met from Arizona, they love it and they want to support. And a lot of them want to come back.
Yeah.
So take advantage of that.
Yeah, for sure. Well, thank you so much, Jeff. We'll host you sometime in person, and thank you to everyone who came to this webinar today. We'll have many more in the future, and stay tuned for the next Silicon Oasis events. And for any of those who are investors or other ecosystem builders or founders, we're open to collaboration on any spotlights, from podcast episodes to articles to events. So feel free to just reach out to us directly. And once again, thank you, Jeff.
Yeah, go Arizona.
Thank you so much, guys. It's calls like these, attending stuff like this, that moves the ecosystem forward. I promise. So let's keep at it.
Thanks, guys.
Yeah.
Thank you.
Bye, guys.
Thanks, Jeff. Thanks, guys.